Hey, welcome to the Closing Beat, everybody. Happy Tuesday. It's Tuesday. That's right. I know. Hey, that's one way to look at it, right? The markets were down today. It was kind of a rough day. The good news is it's already Tuesday, right? So we're that much closer to the weekend. Hey, welcome to the Closing Beat. We're financial advisors here at Jazz Wealth. We, I think, are the only financial advisors that actually manage our own accounts, our own funds. We don't buy mutual funds, ETFs, and we actually care about the growth of everything because that impacts us too. We only grow as our clients grow, so we don't want you you're getting in trouble there or getting taking risks that you shouldn't be taking. We're going to talk about the stock market today, and I was a little behind. Anytime there's a 3-day weekend, I get a little bit behind, especially early in the year because people are excited to talk about their money and what they want to accomplish and everything, and I love it. So just a little bit behind, but I've got some stuff to share with you here today, and then I'll take your questions. We'll see what we've got. Fair amount of news to kick off the week, and that's because it's earnings season. So we will cover all of the upcoming earnings as well, give you the stats on all of that so you're updated. This Thursday, our Wine and Wealth class is going to be talking about our new ability to manage 401ks and TSPs and things, even if they're not here. And then I also want to talk about how we manage the funds themselves, particularly how you take different levels of risk by me moving the fund or moving the positions in the fund, because pretty much everybody here has some custom level of fund. I don't believe in the cookie cutter approach if possible. Also, we're going on a ski trip. The company, we're going to close up shop next week from Thursday night, Friday, and into the weekend. So we kind of planned this out last year. So if you have any questions or you want any help, go ahead and cram it in. Let me know now so I can get ahead, and that way everybody gets a chance to take a little bit of a break for our little trip where a bunch of Florida boys and women go up there and try to ski and probably damage ourselves there. Anyways, let's take a look at the markets here today because there's a lot going on. I'll start with the Dow. The Dow down 1.4%, nearing the 200-day moving average. You like it. That's a pullback. It's good. Where are we at? This is the most calm of a pullback so far, only down about 4%. So getting things going, I hope. But anyways, you got that back down there. And the reason for that in the Dow is going to be your financials today. Got Goldman Sachs with earnings there. A lot of volume on earnings. Bit of a miss for them. JP Morgan fell in sympathy of that one and had actually started falling the other day on their earnings. Then the tech names that have already been showing their weakness. Got Microsoft continuing to pull back. Cisco as well, although not really a big weight on the Dow itself, but Salesforce is. Salesforce continues to pull back, and throw in Apple as well, and you got yourself a recipe for a Dow that just wasn't going to go positive. There's just very tough for that to happen. Now, the Dow itself, there we go, is holding up the best. It's only down about 2.5% year to date, so not too bad there. But if you move on to the NASDAQ, that's the worst. The NASDAQ is the worst. It's working on a 7% pullback here so far, year to date, and out of the Dow, S&P, NASDAQ, and Russell, it's the worst performer there. Rates as they pertain to your sort of forward-looking and earnings-wise tech stocks, even biotech to some degree, that's continues to be the focus there. If I pop over to the 10-year real quick, you got new lows in the 10-year, which means the yield is at new highs. I believe 1.81, somewhere right in there. That is going to be the highest yield on the 10-year since before the start of COVID, right? So we've just broken out of that range, and oh my gosh, right? Rates are going higher. Yay. I actually think it's a good thing. Slow you guys down from buying stuff. Crazy out there, you people with your houses and cars and everything. Yikes. I'll pick on you later, though. So other than that, though, you take a look inside the NASDAQ today. Aside from like Moderna, which I believe ended up being the worst, just barely. So Moderna is the worst performer. But if you take that one out of the equation, you've got a lot of semiconductors. Applied Materials got smacked today, 8.77%. KLA 10 Core reversing all of Friday's move there. That's a stamp, by the way. That's a stamp by the bears. You know what I mean when I say that? So when there's a tug of war at a price area, in this case at highs, there's this tug of war, and then you get a wide range down day. That's the bears saying, we got this. This is us. So you don't look at something like KLA 10 Core and say, well, I bet tomorrow it's up. Right? There's a chance, I guess. It could reverse. But the probabilities now are to the downside for something that has a reversal as strong as we saw today in KLA 10 Core and AMAT and stuff. You would bet on lower to sideways. You don't want to bet on a move to new highs at this point. or you're likely not going to be very happy. Lam Research also doing the same thing. We'll follow up with these semis as well. They're just fun to watch. Microchip, one of the better pullback stocks as well in the NASDAQ. And if you look to the upside, I'll cover this here in a minute, but the biggest gainer is going to be Activision, a much-needed buyout. We were talking about this earlier. This is exactly what they needed. I mean, it's perfect that Microsoft is buying them. Whether you agree or disagree with the price, these poor guys needed that. So we'll come back to that in just a second. You're going to have EA Sports also higher. There we go. Also higher because of that news there. And, that's pretty much it there. Couple stocks. Some of the Chinese names did okay. Pinduoduo with a slight gain. JD.com actually finished negative on the day, but they held up the best. And Lululemon trying to pull back, trying to bounce off of these lows. I tried to put a position on this one today and did not get filled. So no worries there. Also, if we're taking a look at the S&P 500, rates affecting these guys as well. They're not immune. But REITs, right? REITs, the worst performing sector year to date, which is a good thing. That's not, nobody's upset about that, right? If we look at REITs, they held up, they're one of the ones to hold up the best today, but they're down about 7.5% year to date. And then other than that, it's going to be tech. XLK is one way to look at it if you want to break it into a sector there. You got tech in a close second, down 7%. And working on an even better pullback. Totally cool with this pulling back 10%. I welcome it. Remember, we have not had a 10% pullback in, I believe, 16, 17 months, if I had to guess the exact time frame, which is not normal, right? Once every 0.9 years. That's exactly the stat there. So it is more than overdue for this one. Now, today, financials are going to be the worst, second worst performer. Actually, tech was the worst for today. But today, financials the second worst because of Goldman Sachs, JP Morgan, all the big banks reporting their earnings. It's not going well so far for them in terms of responses. You got crude oil hitting new highs there. I believe so. Yep, almost $86 again. Got a drone strike overseas, just a small one there. That affected oil today, but also, come on. You got XLE. This is the energy sector. Energy sector is by far the best performing sector year. It looks just like last year at this point. I mean, where you had energy way up here, all the other sectors down here, but still growing. Energy's up 16%. Year to date, the next closest sector is financials with a whopping 2%. So there's just no chance, right? That energy is blowing the doors off of everything else. Now, I mentioned that earnings were driving the markets here today and will be doing so going forward. So I'm going to pop on over to this guy here. I apologize if it's a little bit small. I was trying to cram a lot into one slide. Maybe you can make your screen bigger or something. I don't have anything else I can do here, but well, let's try this. Can I just go like that? Oh, yeah, look at that. All right. Here's earnings this week. It is sorted by day. So we've got going into tomorrow, and I'm showing you tomorrow morning, tomorrow afternoon, AM, PM. We're reporting the ticker symbol. We're reporting the name of the company, in case you're not familiar with them. The column over here, if you're familiar with the show, you've seen this before. The number of reports. I filtered out any that have, I believe, less than 10 earnings. This is each quarter. So, for example, pick a name you know, Bank of America. That's the name. They report tomorrow morning. They got 81 quarters of history that we're using to derive all the information that you see to the right. They beat on earnings 78% of the time. They beat on revenue 55% of the time. Not the best in either one of these cases. The average move is a small gap down, and you'd think that, well, unless they just blow away earnings, then every other bank stock is gap down. So that's probably the case for them as well. And the average full day move is for it to gap down and then sell off even more throughout the day. And then I put the volatility over here really as a comparison to other stocks. Netflix always ranks as the most volatile in this week of earnings season. So you can see that hands down, that is your biggest mover and most volatile stock. But you could take a look. So tomorrow morning, it's going to be more of the same of what we saw today. Bank of America, Morgan Stanley, State Street, and U.S. Bank in there. And then after hours, you got Discover Financial as the other financial to report for the day. So we're basically getting the big guys out of the way this week. I do want to point out Fastenal. That is an industrial stock that gives you good insight as to construction. So a lot of people look at that one as well. I'll likely bring it up for you. Couple healthcare stocks, and then later in the week, United Airlines and American Airlines. There's this 5G battle going on right now. You're looking for comments there as to how that may affect flights in the future, or if they came to an official agreement. I know they're working on it, but You might look at that. Also involved in general economic earnings you may want to watch, you've got the rails down here, Union Pacific, CSX, and where is the other? No, I think that's it for this week, actually. Well, you focus on them. Obviously, rail companies should be full. They should be backed up. They should be busy. They should not have any empty cars. You get the idea there, right? If we're all struggling to get supplies and stuff, are they not filled to the brim with extra cars, and are they not killing it? Typically, they're not very exciting stocks to play earnings, like to have like a bet that it goes up or down. You can see the volatility is next to the lowest out of all the stocks on the list, 2.8, 3.4. So very small moves here. I just like looking at these to kind of get a feel for widgets. Are widgets moving faster or slower? What are we doing there? And then Netflix is the big focus, right? As we go into the end of the week there, again, it'll be your most volatile, and it's an after-hours report, so that'll come out Thursday after hours. The best overall is Citrix. Second best, I believe, was it's Intuitive Surgical. Then you got American Airlines in terms of beat rates, if you're looking for that. And the highest beat rate with the lowest volatility, I believe, was Procter & Gamble. Again, it's not the most exciting, but it's one that you say, I might not play it on earnings, but if I already own it, this is one I probably don't have to look too hard into. It normally does just fine. They're consistent. It's a slow grower, and it's not normally volatile on earnings, so I probably wouldn't spend much time there. I believe the worst is Baker Hughes, and has been the worst for the last 5 years or so. Yeah, it wouldn't be 5 years, though. The last 2 years, they've been the worst. And there you go. So give you a little something to snap a screenshot of if you're curious. If you own the positions, you're just looking at it to go, wow, which ones do I expect excitement from? Naturally, Netflix, right? If you own that, you're going to see activity. It's going to be a fun day. So something to help you out there, and we will keep track of it and see how things go as the week progresses. Okay. Put a few trades on Friday, and then, and I'll be perfectly honest with you, I did not do this one today. This was on Friday, so I was early to it. But Starbucks, sold, it has a separate position, sold a $95 puts on that one. I was a day early, hopefully only a day early, but still got that one there. And I still have the strangle. I rolled down the calls to add more credit to the position, and I'll keep you posted on that. Now, the reason why would you start a position like this falling like a knife? Well, what are you doing? What are you looking at? Well, think about this. How often does Starbucks fall this far, this fast? And if it is often, what happens afterwards? If it's not often that this happens, is it an opportunity? So let me show you real quick. If you're a research member, hop on in there real quick. We'll go like this. Here's what I pulled up, and I saved it just to have it there. How often does Starbucks fall more than 15% in a 15-day period, which has fallen 16% in a 15-day period? And I want to look back 20 years. I find that this has happened 65 times over the last 20 years. I go, okay, well, this is every instance. I can verify that. This is what happened before, and this is what happens the 15 days after. All right, sum it up for me, Dustin. What do we got? It is positive in the next 15 days, 70.77% of the time. That's better than the stock market is on an average day, so I like that. In any 15-day period, the stock market is not positive 70% of the time. You'd think it would be, but it's not. Average gain going forward, 8%, that's fine. Median gain, 7%. So by me selling the $95 puts, I don't really care if it goes up. It's nice that the stats are on my side, and it'll make for a faster profit, but I'd be okay if it went sideways. I'd be okay if it started going lower for a little bit, then went sideways, right? So I'm playing that game with the data, not just looking at it and going, ooh, that's extended. Okay, well, that maybe draws your eye to it, but what do you do with the data going forward? We say, well, hey, looks like the odds are on our side. If you lose on a position like this, you knew you had a 30% chance of losing, size accordingly, right? You can't guarantee a win on anything, but when the odds are on your side, you strike. Kind of like I thought the odds were on my side. The Cardinals would kick more than 2 field goals last night. They did not. The odds were not on my side, apparently. I took a shot. It cost me $100, but it is what it is. I'll be back, and we'll play another one at some point. Oh, also, last one I want to point out. Cody, and I'll just show you his trade here. Cody said, I got a good feeling about that Planet Fitness over there. He sold the $75 puts and was able to because volatility was a little bit higher there. He got a nice premium for doing so. So if that one goes to hell, that's Cody's fault, not my fault. But not bad over there. Would you like to offer something there? Oh, he's dead. Look at that sad face. So that was his trade. And the only other one that I did was Etsy, I believe. Did I tell you guys about that one already? We'll point him out. Etsy sold the 130 puts. If I didn't mention that one already, that's what you have there. I'll keep you posted on everything. And if you're a research member, starting, depending on how the ski trip goes, if we're really sore, it might be a week late. But right over there, we're actually going to do a live, like, here's my account, take a look. I mean, for better or worse, see how I'm doing. And everybody here in the office as well, we're going to have trading time. So we'll just do it during lunch or something while we're all hanging out. And I'll be teaching as well, but you get to see exactly what's going on, whether it's good or bad. I don't really care. I'll just share with you what I do, when I do it. And I'm going to have a couple lesson classes ahead of time so that it doesn't just shock you. I do things kind of differently than, I mean, you don't see it on YouTube or anything like that. So I'll do a lesson to go over everything that I'm looking at first, so that you know when we make a decision, it's not just because we think it's a fun idea. You know, all has to be data driven, and about to open some eyes when you see how we do it. You want to know how the hot dog's made there? Oh, new highs and lows. I'll take your questions for the day. New highs and lows were breakdowns. Charter broke down to new lows today, along with Match.com. Got you a breakdown. They're getting extended, but nothing that I get excited about just yet. Same like we do on the upside. When you see a breakdown, you got PayPal breaking to new lows. Maybe put it on a list, just see if you get a chance for another play at another time. But I'm not as excited about those. They just made new lows today. Anything that made new highs is going to be energy related. Apache is one of them there. Occidental Petroleum is the other, I believe. And my Hess made new highs. I'm actually short Hess, but got a little bit of wiggle room there. And you can't blame it. I mean, it's like, all right, fine. You're going to blow up something overseas. The oil's going to go up 3%. It's not going to be my day, so I'll walk away from that one. Still have the play, though. Sold the $100 calls, and that goes with everything else that we have. What else? Stocks in the news. Well, you probably heard Activision. They got bought out, right? 69, 70 billion bucks for Microsoft to buy them. They needed that, man. Activision's been going through some sexual harassment type things, misconduct. There was, if you read into it, you're like, whoa, okay, this just wasn't one instance. This became a little bit of a culture. How do you get away from that? Microsoft swoops in and says, we know how to handle that, and we could sure use your business. So apparently that deal's going through. That would be, or that they're going to try to get it to go through. Microsoft down about 2% on that news and was already weak to begin with. Charles Schwab reports earnings. Did they? Yeah, they did report earnings, actually. So Charles Schwab reports earnings there, and the cool part that I liked about it was they had great earnings. Everything was fine. But people trading on margin, meaning, you know, us, up 43% compared to last year. So more people are comfortable using margin at this point. That is usually a inverse indicator of the market. When more people are using margin, the market tends to get a little toppy. That's how we look at it. So we'll see. I have no problems with margin as long as you know how it works and you know what you're doing there. Goldman Sachs had earnings as well. They said they see inflation across the board everywhere. What'd they say? Not normal inflation, but like payroll inflation, hiring employees, what they cost now, their actual input costs for, their building, all that great stuff. Across the board, when they study all the businesses that they obviously analyze, inflation. Just stop buying stuff. Like the people around here in the Tampa area, you have 18 buyers for one house. I'm not kidding. And it's gotten to a point where they put a house up for sale and they just go, hey, we're accepting offers until Sunday. We'll let you know on Sunday who won. Put your best offer in, you get one shot. What? Like, that's incredible. Everybody's got brand new cars and stuff. Just stop it. Stop buying stuff. It's killing me here. We all see this inflation, but we're all out there buying stuff. Right? That's one way to stop inflation. Goldman Sachs basically saying the same thing in a much nicer way. They want you to keep buying stuff, and I don't blame them. But, I mean, for God's sakes, take a break. Let's just breathe a little bit. All right? Quit sneezing that dough everywhere. All right, you got Walmart down a little bit on the day. They're looking to launching NFTs, getting into cryptocurrency, and now the metaverse as well. That's kind of fascinating that Walmart's looking at that. And Netflix with their earnings coming up. It was rumored Friday or Thursday that they may be raising prices. It's official. They're raising prices. Pretty soon there'll be no difference between cable and Netflix, but that's the path that they're headed on. Other than that, we have earnings tomorrow. I showed you all the earnings, so I will not repeat them again for you. You got the screenshot. Go back and get it if you'd like there. Visa was in the news today. Amazon says they're going to put a temporary halt to banning the Visa cards in the UK. That was the other thing I wrote down there. Israel says that the fourth booster shot's not effective against the Omicron variant, but that's just a headline. Yeah, that's pretty much all I got, I guess. Kick it off like that. See what we got. Yeah, it's crazy. Just met some people at the dog park the other day that moved from San Diego. I said, what brought you to Florida? I said, prices. It's too expensive. They moved from California. I'm like, is it really like that, though? I mean, like, people just leaving? Just like on our block anyways, everybody's selling and leaving. Not to Florida necessarily, but they're leaving the state. I don't know how expensive it is there, but we're seeing more and more of that. We get a lot of New Yorkers, actually. I've met a lot of New Yorkers that have just moved down here. Good people. You would think that all the money that Goldman steals from retail traders, they'd beat on earnings, right? Like, come on, you can't get a few extra pennies out of them? Problem is they're trying to add up a lot of money there. General thoughts on the manufacturing and materials sector, current moment and this coming year. I think you'll see the demand slow this year. There's no doubt that the Fed is actively slowing the economy. They want things to slow down. And that will trickle down. It's going to take the whole year, I believe, but that will trickle down. Yep. Ooh, giving old Kathy Wood some grief there. Yeah, it hasn't been easy there, but that's what you're investing in. So I mentioned this numerous times when that came out. You're not investing in a normal ETF. And I think that maybe that wasn't clear enough and still is not clear enough by them to put that out there. Everybody just fell for the hype, but these are very speculative positions. And when they pay, they're going to pay big, but you've got to be able to handle that volatility of falling 50% to gain a future, 190% or whatever it may be. So I think her skill set was yet to be determined, but I hope for the best. Yeah. Not just house prices over there. I mean, we see the inflation over here, no doubt. I mean, I think everybody sees it, but houses are starting to frustrate me. And I'm happy. I'm not moving anywhere, but what is the rush? Who needs a house that bad? That, in all honesty, Charlie was trying to buy a house and just put in a reasonable offer and was outbid by $100,000. That would be $100,000 over what they listed the house to sell for, which was already expensive, in my opinion. So can we just stop for a little bit? Oh, yeah, if you're a client, sorry about that. In our notes from Jazz, I put a link to a research report on the metaverse by Goldman Sachs, and it didn't go through. So if you email me, I fixed it for you. It should be fixed now, by the way. Yeah. Why am I doing $100 prop bets? That's what got me here. I started off the year with $200. I said, I'm going to give it a shot. Probably going to lose it all. I was being cheap. And I started betting on who was going to kick more field goals, over 1.5 field goals. And I'm like, that's a no-brainer. And I killed it. I think I went up to like $1,100, $1,200. And then I started getting more aggressive with different games. That was great. I was up to like $2,200. And then the Cowboys came along and screwed the whole thing. You just screwed the whole thing. So I'm going through a slump right now. Yeah. I have a great way of making you feel better about your bombing investments. Bombing is probably the right word for that ARK fund there. That's a tough one right now. All right, I'll let you guys continue to complain about California. We don't have the same issues here in Florida, and I am grateful for that, by the way. I'll get back to work. I got a lot of catching up to do, so I will be talking to some of you here soon. You guys enjoy the rest of your day. We'll be back tomorrow to do this all over again. I look forward to it. Adios.